Hi, and welcome to the ECIO market commentary for the month of January. January was a good month for investors as stocks in the US were up 1.5 to nearly 9%. Overseas stocks were up 5 to nearly 9%, and fixed income results were modestly positive. That takes 12-month returns for US stocks up 8.5 to nearly 16%, overseas stocks up 30 to 42%, and fixed income results up 6.5 to about 7%. The past 12 months has been volatile for the S&P 500. Starting in mid-February 2025, we saw a nearly 20% decline in the market as investors became concerned over trade and tariffs. That's been followed by a rebound starting in mid-April, up about 39% now through the end of January. From a sector perspective, we saw a rotation in the market in January. Energy stocks and some of the value sectors led the way higher, while some of the growth-oriented sectors, including technology stocks, were actually in negative territory. So during the month, we did see a rotation away from the Meg 7, the big technology companies, towards small cap and cyclical stocks. So we are seeing market leadership broadening. Non-US stocks, as mentioned, performed very well. Part of that was driven by continued weakness of the US dollar, as well as a shift in capital outside of the US and outside of the concentrated US technology sector. Bond returns, meanwhile, were driven primarily by interest income as yields remained relatively stable throughout the month of January. The Fed did meet in January and voted to keep interest rates steady. That followed 3 consecutive cuts in late 2025. President Trump also indicated that he would be nominating Kevin Walsh as a replacement for Jerome Powell when his term is up. On the trade front, we did see U.S. trade policy in focus again as renewed tariff threats against Europe and Canada added to market volatility. On the inflation front, core CPI came in at 2.6%, so that's keeping policymakers cautious in regards to interest rates. On the consumer and business sentiment, it was mixed, supported by strong economic growth numbers. Third quarter GDP was reported at 4.4%, but that was tempered by some concerns about potentially overspending in the AI area and what kinds of returns investors are going to see on that spend. Economic growth, as mentioned, did surprise on the upside, driven by strong consumer spending and continued capital investment in AI-related initiatives. So going forward, we think investors will continue to be focused on the dynamics of the labor market, consumer spending, Fed policy, inflation progress, economic growth, geopolitical issues, as well as trade uncertainty, all adding likely to market volatility. That concludes our brief recap for the month of January. If your investment committee has any questions or would like to meet with us, please reach out to us at any time. Thanks for your time and interest, and have a great day.